Holy smokes, look at the stock of Red Hat roar. For those of you who don't watch the show regularly, Red Hat is the top provider of Linux-based open source operating systems for the enterprise, along with all sorts of other software for storage, virtualization, and middleware. And lately, the company's gotten aggressive about embracing the cloud. Close watchers know I've been a huge fan of Red Hat for ages, but even I was blown away when the company reported a gigantic quarter last night, which sent the stock soaring nearly 10% today. Red Hat delivered a 3-cent earnings beat off a 53-cent basis, substantially higher than expected revenue, up 19% year over year. But where they really shot the lights out was the guidance. Management raised their forecast for both the next quarter and the full year, while also giving some very bullish commentary on the conference call for, I think, basically saying for ages they're going to do well. For example, all 25 of Red Hat's largest deals renewed this quarter, and they did so at prices that were more than 20% higher. If you were worried that this stock had run out of juice after nearly doubling last year, consider those fears put to rest. Don't take it from me. Let's check in with the redoubtable Jim Whitehurst, the president and CEO of Red Hat, find out more about the quarter, where his company's headed. Mr. Whitehurst, welcome back to Mad Money.
Hey, Jim, it's great to be back on.
It's great to see you, sir. There's a great note today from Deutsche Bank. I'm just going to read it, saying, this is the first time in years that Red Hat has posted 20% plus billings growth in consecutive quarters. How is that possible?
Well, yeah, we really are hitting on kind of all cylinders right now. As more companies move to the cloud, more turning to us as a partner to do that. You know, we've always been strong offline in the traditional data center. I think we're showing that our model works equally well as people move to public cloud. And so as they're looking for a partner to help them move to Amazon or Google or AWS, we're a logical partner. And that's really helped really propel deal size to be larger, expanding our relationships with key customers.
Well, Jim, I got to tell you, we've talked now to Workday, to ServiceNow, to Salesforce, to Adobe, to IBM, and they all have said that the cloud transition has now sped up, and there are a lot of different verticals that had not been in there. Are you seeing new kinds of companies going to the cloud that had not embraced it?
Oh, absolutely. I think cloud adoption is really meeting the mainstream now. So originally, it's the most technically sophisticated customers, you know, financial services playing around, and certainly, obviously, tech, media, and telecom have long been users. But in the last year, I think you're starting to see retail moving in a much more dramatic way. I think that's heavily because Azure and Google are getting more mature, and the retailers didn't want to go on Amazon, but they now have options. I think you're seeing industrials starting to move more workloads. So we're really starting to see a lot of momentum, even in core production workloads, which obviously works well for us as we're kind of a franchise player in production workloads.
Now, you've always been pretty forward in getting government work. I don't know, have you been to the White House? Because I was surprised. I mean, of the companies that we deal with that have had gigantic contracts, you've done better than most. Have you been advising? Are you part of any of these conferences?
Yeah, I've not gone to the White House as part of those conferences. They've, I think, been more focused on some of the more traditional names. That said, we had a really nice last couple of quarters with the government. We've always had a large business in defense and intelligence because of the security and performance of our products. And that's now spilling over in a very significant way to the civilian agencies. So we had a really, really nice quarter in government, though that's really happening more bottom up via the agencies.
Now, in the conference call, one thing that struck me, you kind of buried the lead, I thought, this 5G transformation. I mean, you got a $66 billion total addressable market, but you said the 5G transformation could be gigantic in itself. You used the term, you said it was very, and then you said much, and then much, much larger. How big can this thing be for you?
Well, you know, at this point, we're trying to mute expectations there because it's a new market for us. We are obviously very, very strong in the enterprise, and we have been. But at this 5G transformation, all the major telcos are going to a technology called OpenStack. And we're the largest provider of OpenStack. We're the largest contributor to that whole sets of technologies. So we expect it could be quite large for us. In fact, 3 of the 4 large telcos in the U.S. already have 8-figure relationships with us in place. And those are really just scratching the surface with very small implementations. So, you know, at this point, I want to be guarded because we're in early days, but it could be a very, very large business, you know, on par with our enterprise business, you know, over the next 5 years.
That would be incredible. That would be multi-year, as far as I can see, double-digit rev.
It has a large potential opportunity for us. You know, it's still early days,
right,
but the market opportunity is there, and our business model with a stable, long life support fits really, really well with telco infrastructure, which once it goes in place, it's going to stay there for a decade. And that's really our marquee model, is taking open source, which changes a lot, and make it, you know, stable and consumable for, you know, decades-long kind of lives. So it's a perfect market for our business model. Now we have to execute into it.
Well, I mean, in terms of a transition quarter, I thought it was great that you talked about how you'd always been speaking to the purchasing manager, but the discussions now are at a much higher level when Red Hat's involved.
Well, exactly. So, you know, for a lot of years, open source was about offering lower cost alternatives to traditional software. And, you know, in that world, we were talking to purchasing people. So, you know, Linux was cheaper than Unix or Windows. Right. But now so much of the net new technologies, whether it's around things like containers, almost anything to do with architectures that run on public cloud or 5G and telco, are all happening first in open source. And so we're coming to customers and talking about, well, how do you move to cloud? Not use our software as you do it. Or how do you transition to more modular architectures as you're trying to compete in being Uberized, right? So in that transition, you know, all of a sudden we're strategic. And as soon as you have a seat at the table with the CIO and sometimes the CEO, you know, obviously the size of the opportunities just gets dramatically larger.
Well, I got to tell you, Jim, you put it all together. Last quarter was great, too. And, you know, I've been watching and how great things are. But this was the breakout quarter for certain for multiple years. I believe that. That's me talking, not you. I don't want to put words in your mouth. That's Jim Whitehurst. He's the president and CEO of Red Hat with a monster good quarter. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.